Hello and welcome to the trade setup. Today I want to share my view on the possibilities that are available with AMD, what to look out for, and to get started I view this whole move as a 1-2, and we only want to use this as a context for the more medium term picture, because we had a very long wave 2 which lasted actually 30 years. So just keep this in mind as a context, that we are now looking possibly at something like a possible continuation of the uptrend that has already started in 2015. And here we actually have quite a few possibilities, and I will try to walk through all of them. So there's many counts that could be had here, and since this also looks like a three-wave move, we also need to consider that this is very likely maybe the start of the third wave, which would be a wave A in this case. And the wave A could be either 5 waves, or it could end with 3 waves, and then we start a larger correction. As you can see, this correction could have already started. We have been in quite a downturn since 2024, and we dropped 65%, which is quite substantial. And we need to look out further, because if this is a three-wave move, the A wave, if this is a three-wave move, we could be looking at maybe a drop down to the region of even, let's say, $20. I'm also looking at the price action here, but the trend is still up, and we should still look further for what other possibilities there are here. So firstly, if this is indeed a wave A, it doesn't have to have ended here. It could have actually ended here. We could have had a small wave B, and now we could start a wave C, which could push the price quite high, and maybe even in the region between $900 to actually 5,000 plus. But let's not focus on that for now, because first, if this is indeed a wave 1, we have to hold support and not go below the price of $54 that we have had in October 2022. So far, this is going on track, and looking at a smaller time frame picture, we can also see that this is a three-wave move. Now, if this is a wave 1 and this is a wave 2, where could we expect it to end? Well, this is a bit of a mess, the section right here, but let's assume that we have a wave A that ended here, a wave B that ended up here. See, both wave A was a 5-wave move, wave B was a 3-wave move. Actually, we could go on the lower time frame to see this better. But yeah, let's assume this is wave B, and then we come down in wave C. Now, wave C could have actually already ended. We have pushed quite far, it seems, compared to wave A. If we look at the extension, we usually expect wave C to be 100% of wave A, and it is actually much past that. So we have to keep an open mind. It can extend, it could have extended further down and still be the whole wave C. Or it actually could be that we have a wave 1 here to the downside in wave C, a wave 2 up, wave 3 down, wave 4 up, and then another push, another leg down in wave 5. This does not have to happen in markets recently, and in the last years at least. I have seen it many times recover without having the 5 waves in wave C. So to be clear, this is normally what a wave C, what you would expect in a wave C. But if it could be a more complex correction, that's the idea. And then it wouldn't need 5 waves in wave C. But to keep our options open for the short term, we can assume that we have a wave 1 here, we have a wave 2, we have a wave 3, we possibly have a wave 4, and then we have a wave 5 that is expected to, that would be expected to go below the low of wave 3. Now, if we actually look at the Fibonacci retracements, which we use to determine where we should expect support or resistance, in this case it would be resistance. We see that we have already pushed past the 50%, but that doesn't necessarily mean much, because this wave C, if it is, it looks very corrective in nature. It looks to be in 3 waves, and then it often actually pushes past the 50% up to the 60.1%. And also this has already pushed what would be the bottom of wave 1. So wave 4 has hit the wave 1 high. So until we actually get past 127.8 dollars, I wouldn't necessarily rule out completely that we do get another leg down in wave 5. However, markets are often upward looking, and I wouldn't put all my eggs in one basket, to say it like this, and assume that it will actually reach lower, because we can assume that this is a more complex correction. This could be WXY, and then this could already be over. There's many ways we could actually count this because of this mess here. So to keep the options open, we need to consider that we may have a correction here, and the big correction is already over, but we could still be now in a wave 1 of wave C that could still actually go lower and give us an entry opportunity. So if you want to have a chance to still join in the possible rally to the upside, you might want to actually have a small position here, because we could assume that this is a wave 1, and it's in the wave 2. If it holds, it could be a great opportunity. A wave 1 or wave A, I suppose, actually. So yeah, this could be a great opportunity, and a great place that I see for that is actually right here around $94. We see a cluster of support in this area. Actually, we see that we previously hit it and pushed back up, so that's promising. We had another point here that pushed us to a new all-time high previously. We had another hit of support here, so we could actually come down, hit $95, and then we just start rallying with quite promising upside, right? If you enter here around $95 and put a stop, maybe let's say at the last low, but perhaps even a bit lower, below the bigger term resistances, support, which is right here at $74. You have a risk-reward ratio of 1 to, let's say, even if we do hit another resistance here and we are in an even larger correction where we do come up, but then we hit resistance of the larger time frame, which would be a wave B, we could assume that we go up to $130 to say this would be the first resistance point. That would be 40% compared to 23. It would be an okay time to take some profit, but it could go higher to 60%. Another resistance point on the chart because of the price action where we got here and then we had a substantial correction, or actually even higher where we already get into the territory of a 4-to-1 risk-reward ratio, and that doesn't even exclude it from going, even higher. So I don't know if I should go on. This has already been pretty long, and there are... Oh, sorry, my cat just jumped on me. This video is already pretty long, and there are still more possibilities on the bigger picture, but on the shorter time frame, this is what we should focus on. This move up, and as long as we hold support, and we are still in a possible opportunity to have another move down that could give us an even better opportunity to enter than right now, we should consider that the trend is still up. It's been up for a while. Even with this correction, we are down, like right now, over 50%. So yeah, I think we should focus on, we should trade with the trend. If you want to actually enter, this might be a good chance at $95 if you want a better risk-reward ratio on the long term. 110 might be fine, depends on your plan to trade this. But if it gets down here and you want to have an opportunity to trade this, you can get a pretty good risk-reward ratio and then have a stop below $72, or if you're not optimistic, you can wait even longer. The other counts for this setup could actually lead it much lower. But you know, if you never enter the trade, you might miss it. And then you just FOMO in and end up buying it like 150. It goes maybe to 170. You don't even sell, and then it goes down. The idea is that it could go down here, and maybe it won't go to new all-time highs, but it has actually a good chance that it will hit 150 or more, let's say 130 and more, or more, before it actually goes lower than 70. So I want to thank you for watching. I hope you enjoyed the video and maybe learned something. If you have any comments, please feel free to give feedback or ideas, and let me know what else you would like me to cover. Thank you, and have a nice day. Bye.